Okay, now we will get into the next topic, revaluation. Hope you guys are able to see my screen, right? I did not stop sharing.
No, Arvind, you were saying we can run a couple of reports on budgets, right?
Yeah, that I'll cover as part of the Oracle standard reports. Apart from these
Okay.
budgets, the other actuals also I'll cover when I'm covering the Oracle standard reports. Okay.
Okay.
So you can see my screen, am I right?
Yes.
Okay. Now we'll get into the next topic, revaluation. So what is revaluation? And what are the steps involved in the revaluation? So revaluation is a process, as the name itself says, is a process of revaluing your account balances based on a particular exchange rate. So that is as per the accounting standards. So accounting standards in most of the countries says that you need to revalue your account balances to reflect the market value. So generally you revalue, I mean, you got four kind of accounts, right? Assets, liabilities, expenses, revenues. In general, you revalue something called current assets. Even within assets also, from an accounting perspective, assets are divided into fixed assets as well as the current assets. So generally you revalue current assets or current liabilities. So we'll take one example, say accounts receivable. Okay, so what do you do as part of the revaluation? If there is a balance under the accounts receivable, how do you do revaluation? So take an example. What is our functional currency? What's our functional currency?
INR.
INR. So generally you perform the revaluation only for the foreign currency transaction. Okay, so our functional currency is INR, and as you know that any transaction which are entered in a currency other than the functional currency are called foreign currency. So for all the foreign currency journals, so system will automatically convert that into your functional currency. So take an example on 1st of September 2017, there is a balance under, I mean, there is a journal entry or an invoice created under accounts receivable for say USD $1,000. So which is converted into INR based on the on 1st of September the exchange rate is, say example, 1 USD is equal to 65 rupees. Okay, so 1000 USD is converted into 65,000 INR. Okay, on say 5th of September there is one more transaction under this accounts receivable wherein we have created a transaction wherein we have debited this receivable account and credited say revenue account for say $2,000. Okay, and on 5th of September, so 1 USD is equal to, as you know, like exchange rate changes on a daily basis, so 1 USD is equal to say 64 rupees. Okay, so this 2000 will be converted into INR, and the INR equivalent of 2000 is 1,28,000. Similarly, on say 20th of September, there is a 500 US dollars, and on 20th of September, 1 USD is equal to say 63 rupees. So it can go up and it can even go down. So last scenario would be say 29th of September. The accounts receivable, there is an entry under accounts receivable for say $3,000, and all of a sudden the exchange rate gone up to say 66. So this 3000 is converted into 3000 into 66. Okay, so at the end of the month, what is my INR equivalent balance? As you know that all the balances are converted into your functional currency. So if somebody asks you what is your accounts receivable balance as on 30th of September, you say that it's 4,25,000. Okay, but how did you arrive at this 4,22,500? It is based on the exchange rates on a different dates. So on 1st of September, the exchange rate is 65, and 5th of September exchange rate is 64, and 20th of September exchange rate is 63, and 29th of September exchange rate is 66. So what you say is your accounts receivable balance as of the end of 30th of September is 4,22,500, which takes into consideration different exchange rates. Okay, this is exchange rate on 29th of September. So what is your period? Your financial period is from 1st of September to 30th of September. So let us assume on 30th of September, when you are closing your books, on 30th of September, when you are closing your books, your exchange rate for 30th of September is 1 USD is equal to, so there is a devaluation in currency or whatever it is, all of a sudden in the market, the exchange rate got reduced to say 60. Okay. So ideally in your books of accounts, for the accounts receivable, you are showing an INR equivalent of 4,22,500, taking into consideration different exchange rates. But when you are closing up your books on 30th of September, law says that you reflect your current assets, which is accounts receivable is one example. You reflect your current account balances, your accounts receivable balances, taking into consideration current market value. So that means now your 4,22,500 INR equivalent from a truly accounting perspective is not a real value. Okay, so that means the if you try to convert this 4,22,500 INR, you are saying 4,22,500 is your INR value for USD of 6,500 USD, but it is not true value, because on 30th of September when you try to exchange your 6,500 US dollars, whatever you got, with your bank, you may not be getting these exchange rates. You will be getting the exchange rate of only 60. So that means this 4,22,500, whatever you are showing in your books of accounts in functional currency, is not a true value. That needs to be revalued, taking into consideration current market value. Okay, so now what you need to do is you need to reconvert the 6,500 into INR using the exchange rate as on the last day of the month. So exchange rate as on the last day of the month is 60 rupees. So now try to convert the 6,500 USD into 60 rupees or multiply with 60. So your true real accounts payable receivable values is only 3,90,000. It is not 4,22,500. Okay. So the difference between 4,22,500 and 3,90,000 is your exchange gain or loss. So this is your revaluation gain or loss, 32,500. So in your books of account or in your financial statement, your accounts receivable balance will reflect 3,90,000 INR. It should not reflect 4,22,500. So after your revaluation, it should automatically reduce to 3,90,000 because you are passing this revaluation entry. So in simple terms, the revaluation is nothing but revaluing your current assets balances using the current month exchange rate as per the accounting standard. So you got same accounting standards in every country, whether it's in India or Australia or US or Austria or Malaysia. Every country has got more or less similar accounting standard, which says that revalue your current assets or current liabilities based on the current market exchange rate as on the last day of the month. So whether the concept is clear before I get into system. Hello.
Arvind,
Is that clear?
is this same concept like cross currency?
No. Cross currency is totally different. This is not cross currency. Cross currency is different, which we'll talk about that in AR.
Okay, so if not cross currency, like in general, right? Like in any company when they are reporting the numbers of quarter or yearly numbers progress, right?
Mm-hmm.
So they will say the in what term they call it, like in terms of the exchange gain or loss. In what is the terminology they used when they are reporting that information?
Okay. So from a reporting perspective, the accounts receivable balance will show 3,90,000 after you perform the revaluation. Okay, so this is called the revalued balance, and this is called the revaluation gain or loss. Okay, so you need to create something called a revaluation template, and within the revaluation template, you need to specify what are the account code combination or what are the accounts for which you want to perform the revaluation. You will not be revaluing each and every account code combination or every account in the system. You will be revaluing only those accounts which the law says. So in some countries, in most of the countries, generally law says that you revalue your current assets or current liabilities. Okay, so even this is also one of the interview questions as to like what are the different kind of accounts which we do a revaluation. In general, current assets are current liabilities, and out of those current assets, accounts receivable is one example, and out of current liabilities, your accounts payable is one example, and bank account balance in foreign currency is also another example for accounts receivable. But again, from a normal consulting perspective, it is up to the business to take a decision on what kind of accounts should be revalued. Okay, from our perspective, we should know how to run the revaluation process, what is revaluation process, and why do we do revaluation. Okay,
Okay.
now
So
get into the
the,
yeah.
the basic question I'm asking, right? Like when typically for an IT consultant companies like our Indian companies like TCS, Wipro, and all these things,
Mm-hmm.
they do business in general. They do business with other uh, geographical clients like US, Europe, something, right?
Yep.
So the income will always be in the currency of foreign currency rather than INR,
Mm-hmm.
always.
Okay.
So when they report their numbers in terms of quarter one, quarter two, quarter three, the results, right? Their company results. Uh, uh, what is the statement in their results, right? Where I can see or we can understand this is the loss or gain of that particular quarter because of that between currencies, between reporting and functional currency.
No. So from a financial reporting perspective, you will not see all these things. What law says is, irrespective of any currencies, always report your numbers in your functional currency. See, these are all the calculations, so many different things which you do in your ERP system. But when you look at your financial statement, which is nothing but your balance sheet or profit and loss account, you just see at a high level what is my sales, what is my expenses, what is my gross profit, what are my expenses, what is my net profit, what is my assets, and what is my liabilities. Everything in functional currency. You will not have all these details like in how many currencies have entered the transactions, what is my revaluation amount, and all those things, because no shareholders is interested in all those things. Shareholder is interested in only what is my number, what is my net profit in the functional currency. If you want to get into all those details, then as a shareholder, every country, the law says this, as a shareholder, you'll have a right to ask the company for more details. You need to go to their company and ask for the more details. But at a high level, in the financial statement, you will not be able to see all these things. So in this example, in your financial statement, if you have not done the say revaluation, you would have seen the accounts receivable balance of 4,22,500. But if after performing of as we have done the revaluation, you will be able to directly see the revalued accounts receivable of 3,90,000 INR. And this is one example. A company can do a transactions in many other currencies. It can do in euro, it can do in say GBP or some other currencies. So whatever the balance, whatever you are showing in INR is the functional currency balance of all the currencies. You will not get into these details in your financial statements, but these details are available in your ERP system. Does this answer your question,
Okay.
Niranjan?
Yeah. Okay.
Okay. Now getting into the system as to how we perform the revaluation. So first thing is we need to create something called revaluation template, and within the template you need to specify what are the currencies for which you are performing the revaluation. Okay, and what are the account code combination for which you want to perform the revaluation. Okay, currency revaluation. Okay, so this is the screen wherein you define your revaluation template. Okay, you can just say Reliance current assets reval template. And whether you want to do a revaluation for all the currencies, so in this example USD, GBP, euro, and other currencies, or a specific currency. So we'll just say specific currency, USD. Okay, and what is the exchange rate type which the system needs to use. So in this example, yeah, as I said, the system needs to use the exchange rate of 60 rupees when it is performing the revaluation. But how does system understand as a that it needs to use 60 rupees? As I mentioned earlier, exchange rates are defined at a something called rate type. So there are different rate types in the system: corporate, spot, and different rate types. So what is the rate type under which system needs to look for the exchange rate? So specify, say, corporate. Okay, and you need to specify the unrealized gain or unrealized loss account. So when I say unrealized gain or unrealized loss account, so you're decreasing your accounts receivable transaction balance from 4,22,500 to 390,000. So from 422,500 to 390,000 rupees you are decreasing, and the difference between these two, that is 422,500 and 390,000, is 32,500. So this 32,500 should go to this unrealized gain or loss account. So you need to specify what is that unrealized gain or loss account. So you can use this unrealized foreign exchange gain, and for loss also, maybe if you want you can use the same or you can use a different. I think we got a different account. Okay, so this is only just the offset account where you want system to take that 32,500 in our current example. Okay, and now next thing is, what are the accounts under which system needs to perform the revaluation. So in my example, as I said, that I want to perform revaluation on accounts receivable account. Okay, okay, so now the cursor is at this level. So specify all the account ranges for which you want to perform the revaluation. So I want to use one particular account, as I said, receivable account. So any journals or any balances under this account account of 1210 with any department, any sub account, any product and intercompany, I want to perform the revaluation. Okay, save this. Okay. Now you can directly click on the revalue button from here, or you can directly go to view request and try to run the program revalue balancer. That's the program which we need to run. You have to perform the revaluation. But before we start performing the revaluation, we need to ensure that there is some foreign currency balance under this particular account, right? Otherwise, when you run your evaluation, you will not be able to see any impact. It will be just a zero because there is no balance. When there is no balance, system will also not perform any kind of a revaluation. Okay, just take this as an example and we'll try to create some journal entries. Okay, ideally this being a receivable account, ideally for a receivable account you should have the journal entries coming from the subledgers, but never mind, we can even create the journal entries directly in GL, because ultimately what system is doing is, under this particular account code combination, what exactly is my balance, whether the entries are entered in GL or whether the entries are coming from subledger, it doesn't matter. Okay, now I'll try to create some journal entries so that some balance will be there under that particular account code combination, and then we can see the impact of the revaluation. Okay, and before even we do that, we'll try to ensure that there is an exchange rate available between USD and INR. Daily rates. So from USD to INR, what are the different dates? 1st of September, corporate. It looks like there is already a rate defined for this. Okay, so we'll try to change it to our rate. So we want for 1st September 65 rupees. So change it to 65. And what is the next period? 5th of September. For 5th of September, we want to use 64 exchange rate, right? So I'm entering the rates whatever we want in this screen, so that when you do a data entry, we can use these rates. So it looks like somebody has entered the same rate for the entire month, which is fine. This being a testing environment. 20th of September, 63 rupees. Hope you guys are following what I'm trying to do.
Yes.
Yes, yes.
Yeah. And then 29th September, I want to use 66 exchange rate. 66 is already available. Okay. And for the end of the month, for 30th of September, I want to use 60. Okay, 30th.
Slightly out of context, but Arvind, what is the shortcut that you're using to for the query when
Okay.
you are able to?
Yeah, I understood. Yeah. So first time I'm entering these values, right? First time when you do a query, F11, okay, and then control F11. Oh,
It'll take a long time.
yeah, I'll show you once again. Close this form. So first you do F11 USD INR 1st September 2017 control F11, right? Then again do, okay, this is the first query which got retrieved. Then again do
Right.
F11, again F11, two times F11. Then it will bring you the last query and come here and change it to 20th September and then control F11. So two times F11.
Okay, 2 times F11. Okay.
Yeah.
Got it. Got it.
Yeah. Okay, now we have entered the exchange rate. So for different dates, 1st of September, 5th, 2029. Now we will try to, and even for the 30th of September also. Now we will try to enter journals on these dates using the account code combination, whatever we have used in our revaluation template. Let me just check what is the account. I don't remember. Yeah, 1210. Yeah. So test reval journal 1. So in a real world, you will not be creating these entries because these are all entries which are already coming from the subledgers. But as now we do not have data, we are creating some dummy journal entries. Okay. So we want some balance under this. So what is 1000 USD? We want balance for 1000 USD. So change the. Okay. I think we forgot to change the currency and now it's grayed out. Once we come to this particular screen, it automatically saves and it will not allow you to change. So what you need to do is delete this journal. Try to create a fresh channel. Change the currency to USD and we want the date to be 1st September 2017 and the type is corporate and this is also 1st September 2017. So what is our general amount? 10,000. So 10,000 USD. Here you can see the entered amount is 10,000 and just press tab. You can see it automatically converted into 6,50,000, okay, based on this exchange rate. So this is the GL date, that is the general effective date of the journal, and this is the date currency conversion date, where sometimes it could be a scenario wherein like GL date is 1st of September and you can even use the previous month exchange date also. But for our current scenario, we will use the same thing. Okay, so this is for the currency conversion and this is for the accounting perspective. Okay, so debit receivable and credit maybe say revenue account. Credit could be anything, but I'm just picking up revenue account. So this is the first journal entry. Post the journal entry. Okay. And now click new journal and try to create second journal entry. Test reval journal 2. Currency is USD. And what is the date which we want to use? 5th of September and for $2,000. So the rate is automatically populated there. $2,000 USD. Press tab, automatically it gets converted into accountant amount 1,28,000 rupees. Don't remember the revenue account. Got two entries. Click on third one. Paste channel 3.
USD, Arvind.
Oh, okay. Sorry, you're right. Again, I made a mistake. Oh, looks like you guys are active.
Sleeping time.
Yeah, especially I know it's for you. What is the date for the third journal? 20th of September for 500. I think it's 4020. Okay, we have completed 3 journals. We'll complete the last one, 4th journal. September. Alright. 3,000. 4020 is our revenue account. So we have completed 4 journals. Ensure that all the posting programs are completed. So now, ideally, if you go to account inquiry, okay. So once the journals are created, if you want to check what exactly is the balance under your account, you can go to inquiry account. So this is the period for which we have entered the journals. Put your account code combination, so which is 1210. We are interested in only accounts receivable. Forget about the revenue account. So we can see 10 lakhs or 1 million. Okay, click on journal details. Are there any other journals? Yeah, 1 million. How come it's 1 million, but
The first line is you missed one more zero.
where? Yeah, this is 1000 into 65, 2000
No,
into
that is
65.
10,000.
Sorry?
That's 10,000. In the first line, you have
Okay,
given
got it.
10,000.
Got it, got it. Yeah, you are right. Yeah. Okay. So 1 million INR. Okay, or like 10 lakh 7,500. Okay, this is my INR balance. Okay, show balance. So this is in INR. And if you want to check the entered currency, you can click on folder, show field. It's not showing the entered value. Okay. The other option, if you want to see the entered, is change the currency time from total to entered. Enter as USD. Okay, here you can see the balance. Your entered balance is 15,500, which is converted into 10 lakh 7,500. So this is your USD, this is the converted INR. So whenever you run in any of your financial statements, it will show only this value. Okay, that is converted into INR. It will not show this USD balance unless until you run some specific reports based on the entered currency balances. Okay. Now we did not perform any revaluation. Before revaluation, this is the balance. Now we will try to perform the revaluation and let's see the impact. For running up the revaluation, you can go to currencies, revaluation, bring up that particular template, click on revalue, or you can directly go to view, request, submit new request. I think I am getting echo from somebody. Can you just put on mute? Yeah. Program revalue balances. So when you run this particular program revalue balances, it will ask you to select these parameters. What is the ledger? Reliance INR, that's the ledger. And what is the template name? So it will automatically default to the template whatever we have created. There is only one template. If it is more than one template, it will show those templates in the drop down. And what is the period for which you want to perform the revaluation? Okay, it will show these are the only two open periods as of now, so that's the reason it is showing only those two periods. Select the current period, September. Okay, and what is the revaluation? If the system will calculate the revaluation, what will be the revaluation journal entry date? So by default it is showing today's date of 16th September, but in a real world you perform this revaluation on the end of the month, that is on the last working day of the month or last day of the month. So it is defaulting to just the system date. You change it to 30th of September. Okay, and what is the date which revaluation date or exchange rate which it needs to use? It needs to use the exchange rate on 30th of September. So that means it needs to use this 60 rupees exchange rate. Okay, now let us see what will happen. Perform this revaluation. Okay, so it will try to do this calculation. It will try to convert this 15,500 into INR using this 60 rupees exchange rate, that is exchange rate as on the last day of the month. Okay, and the difference is this, which is unrealized gain or loss. Okay, let us see now if we are able to see the 77,500. Program is completed. Click on view output. Okay, looks like it has created some entry for 77,500. Pick up this particular batch and check what exactly is the entry which system has created. Go to journals, enter, put your batch name, find. So if you observe here, for the entered currency balance, it is 00. There is an impact only on the functional currency because our objective is to convert the functional currency balance to a revalued figure based on the exchange rate as on the last day of the month. We do not want system to touch the entered value. Entered value should be still as is. Okay, so entered value still will be 15,500. So in this case, that is the reason why for the entered currency it is 00. There is a value only for the functional currency. So our accounts receivable balance got, this is the accounts receivable, got reduced by 77,500. Accounts receivable always shows a debit balance, and so our objective is to decrease that from 1 million to 1.07 million to 930,000. Okay, so from 10 lakhs you want to decrease it to 9,30,000 because 9,30,000 is the true figure as on the last day of the month. So you need to decrease it from 10 lakhs to 9,30,000. So the difference is 77,500. So 77,500 should be reduced on the accounts receivable. So that is the reason why your 77,500 is credited, and the balancing figure, I mean that the other side, the debit has gone to unrealized foreign exchange gain or loss. So do you remember where did we specify this unrealized gain or loss account or unrealized loss account in this case?
Yeah, during the revaluation template.
Exactly. In the revaluation template, we can go back and check the account is 7840 if you remember. F11 control F11. So this is the account 7840, 7848. So whatever the account, whatever you have mentioned, system has picked up that particular balance and throw that particular balance into this unrealized gain or loss account. Now go back to journals, enter, bring up the journal. So this is the journal which system has created. Sorry, not this one. Where is our journal? Yeah, this one. Okay, now post this particular journal entry. So once you post this particular journal entry, a request get triggered, ensure that request is completed, and then you can go back to account inquiry. And in account inquiry, when you check the balance for this accounts receivable, it should now show, instead of showing 10 lakhs, it should show only 9,30,000. Okay, because 77,500 got reduced based on the revaluation. Okay, it's completed normal. Now go back and check inquiry account. What is our account? 1210. Okay, you can see the balance is 9,30,000 INR. Okay, if you want to check in entered currency, as I said that there is no impact on the entered currency, you will be still able to see USD value is 15,500, but only INR value will be 9,30,000. Is that clear?
Yeah.
Yes.
Okay. And in general, what you do is, this is the revaluation entry which you created on 30th of September, which is well and good. You did your financial statement reporting, everything is fine. Okay. Next month, that is in October, you will again do a revaluation. Okay, when you do again do a revaluation, again there will be what you call transactions of September as well as October, because the revaluation generally happens on the YTD balance. So there will be again different transactions entered for October. Again, you will be doing a revaluation. So as you will be again doing a revaluation in the month of October, what you do is, as a process, revaluation entry, whatever the revaluation entry which is created in September, you are going to reverse on the first day of the next month, and then on the end of the October you again perform the revaluation. Otherwise there will be a double impact on that. Okay, and then again October revaluation will be reversed on the first month of the first day of November, and then again at the end of the November you again perform the revaluation, and that goes on. Okay, that is from the accounting perspective. Okay, now coming back to the next topic.
Arvind, how to reverse it? Like you
Okay.
mentioned reverse, right? What do you mean
Okay.
by reverse and how do we do that?
Reversal, there are two options, similar to program automatic posting. Similarly, there is something called program automatic reversal. You can do that, but if the number of reversal entries are very less, what you can do is, you can go to the journals, enter. This is your entry. Okay, review journal entry. You can directly click on reverse. You can click on reverse here, or you even click on reverse batch here. Okay, we'll do here. Click on reverse. When you are reversing, it will ask you to select the period in which month you want to reverse, whether you want to reverse in the current period or future period. Obviously you want to reverse in the next period, which is October in this case. Okay, if you remember,
Okay.
whatever the periods which you have open in this system for this ledger is only August and September, but still October is also coming up in the drop down. Any guess why October is coming up here, or on what basis October is coming up here?
You open the future open also to see, right?
Exactly, in the ledger definition there is something called future enterable periods. So we have set the future enterable periods as 1. So when you say future enterable period as 1, for all the future enterable periods you can do a data entry, or you can create an entries, but you will not be able to post until the period is open. So what generally user will be doing is, on 30th of September, on 1st of October, once the period is open, they'll come to this particular screen and reverse, or even on 30th of September also you can reverse it to the future period, but the entry will be posted only once the October period is open. Okay, okay, now as you clicked on reverse button, there is a request which got triggered. Okay, and once this program is completed, we can go back and requery for that reversal general and try to post. When you try to post, it will throw an error message saying that general entry cannot be posted because the period is not yet open. Okay, it's completed.
And Arvind, sometimes I mean the business asks to close the account, right? I mean some close in the sense they wanted that to be not to be used anymore, right? So in that cases, uh, do we show the YTD PTD balances as revaluated ones?
YTD balance. Okay, so whenever the account is closed, so remember, whenever an account is closed, you can go to the segment value screen and you can disable that or put an end date. Okay, but generally from a process perspective, before closing of an account, it's not like a go to the segment values and just disable that. They have got a process. First, they need to take an approval. They need to ensure that there is no balance under that particular account. They need to clear off the balance under the particular account or move the balance to some other account. Okay, then only they are supposed to, from a business process perspective, from a system perspective, system will allow, then only they are supposed to close the account. So when at the time of closing of the account, there is no balance. When there is no balance, there will not be any revaluation which will come into picture.
Okay, okay. So they should clear off the balances, right, on that account.
Exactly. So again, these are all kind of a production support issues. The production support issues will be something like somebody has gone there and disabled that segment values or put an end date, and the user stopped using that particular account. But at the time of revaluation, again there will be an error message saying that there is some balance, but system is trying to create a revaluation, but it is not able to try to create a revaluation entry because the account code combination is disabled, something like that. Okay, so that is a production support issue. Again, you get into the details, and then in that particular scenario, we'll go and ask the user to enable the account, let the revaluation continue, or we'll ask the user to enable the account, first to clear up the balance, that is like ensure that there should not be any balance under the particular account. Okay, once that is done, disable the account and then run the revaluation. So when you are running a revaluation at that stage, you should not be getting any error message because there is no balance under the particular account code combination.
Okay, okay, got it. So system will allow to close the account or disable the account even when there is some balance on it, right?
Yes, yes, yes. I mean, unfortunately, that is the system functionality. Yes, it will allow. If you do not want that to happen, then you need to put some kind of a form personalization on that segment value screen, wherein as soon as the user disable that, uncheck that enable checkbox and put an end date and save it, system should check for the account balance under various account code combination using that particular account, and then you throw an error message. I don't think so. Nobody will ask such kind of form personalization because that's a process issue.
Okay, got it.
Because everything you
Okay,
cannot
one
see
more thing.
put it in system. Yeah.
Yeah, one more thing, Arvind. I mean, when you say check for the balances, is it only the GL level show balances of that particular account with the wide range of using that account as a natural account, or
Yes, yes.
any other options to verify?
Okay, so one option is to go to account inquiry and check that. And if there are a lot of
Mhm.
combinations, that is practically not possible to put your cursor in each row and click on show balances. So other option would be to run your trial balance report. When you run your trial balance report, it is going to show the balances under various account code combinations for that particular account. So that
Okay,
is pretty
okay,
straightforward. And again, trial balance is also like if that particular account is used in say 100 combinations, then there will be kind of 100 rows. If you still do not want to see 100 rows even in the trial balance report, then we can create a custom report, or we can even create something called FSG report. I mean, FSG report is one of the topic in my training session, but that is also another option. Okay.
okay, okay.
Okay. So when you try to coming back to this particular journal, when you try to post, it will throw a message saying that please open the period you have selected for this batch before posting. So obviously, October period is not open, and hence you are getting this error message. Okay.
Arvind, one more thing. When you reverse this journal, right? Uh, what happens to the adjustments happen like the exchange gain or loss, the balances will again go back to that 10 lakhs 70,000 something like that for this account.
Okay. So coming back to this example, so in this case, it is showing 10,07,500. Okay. And after revaluation, the September balance is after revaluation, the September balance is 9,30,000. Okay. What we are doing is, so as of end of September, my balance is 9,30,000. Okay. After revaluation. Okay. Now what we are
Okay,
doing is 77,500. We are reversing in the October. So when you reverse in October, go back to your account inquiry, run the report as of September, it will still show 9,30,000. But if you run the report as of end of October, then it will show 10 lakhs. Because as of end of October, it is taking into consideration the reversal also. So so when you are doing a reversal, whatever it got decreased will be added back. So reversal entry is just the reversal of the original entry. In the original entry, what we have done, you have decreased the accounts receivable balance by 77,500. You are reversing that. That is, you are again adding back that 77,500. So that means as of end of September, you will be able to see balance of 10,07,500. Okay, we can try that. What I'll do is I'll open the October period. This being a testing environment, I'll open the October period, post the reversal entry in October period, and then show you the difference. Like if you run accounting query as of September, what it shows, and if you run the accounting query as of October, how system shows that. Okay.
Okay.
Open the next. So October is still in future enterable period. That's the reason my system is not allowing the journal to be posted. So open next period. Ensure that request is completed. So open period program internally triggers one more program, open period balances. It is updating the balances table internally. So wait for these two programs to be completed. Okay. And now go back to your reversal entry and try to post that reversal entry. So reversal entry is created in October and post it. Okay. So whenever I'm going to this view request, I use shortcuts. So I say Alt V R I. Okay. As you know that these are the access keys. So for clicking on view, okay, you can put your cursor here, or you can click on Alt V and then R and then I. There is an access key. So under I there is an underscore. So these are called access keys. Okay. So I just use this shortcut Alt V R I. Come back. Sorry. Come back to this screen. Okay. Anyways, the posting program is completed. So now the balances is updated in October. Okay. Now check the account inquiry as of September and as of October. As of September, I want to check the balance of. So as of September, it is showing 9,30,000. Okay. And as of October, wherein we have passed the reversal entries also posted in October. Now do an accounting query as of October, then you should be able to see 10,07,500. See here you can see 10,07,500 or 1.07 million. Okay. Nirajan, does this answer your question?
Yes, yes.
Okay. Okay. Next